Rahul Arora is with us. He's CEO at Nirmal Bang Equities. He's with us here in our studios. Rahul, great to have you with us here. Thanks very much for your time. Starting into the second quarter, this calendar, will things, what's your sense? I mean, positive, negative, which way are you leaning as we begin this new financial year actually?
Morning, Prashant. Thank you for having me on the show. So I think it's the start of a very interesting quarter. You've got the IPL underway, you've got a 2020 Cricket World Cup, and you've got the largest democracy in the world going to elections. So I think
festive kind
I
of
think
mood,
for your sector, it's a feast for the entire media sector. But that being said, I think we're knocking on the doors of all-time highs.
Yeah.
We saw a bit of a scare in terms of a correction. I don't want to opine on whether all the froth was taken out of the system, but I think the kind of liquidity which we've spoken about in the past, that is there in the system of maybe about 1.5 lakh crores if you add all institutions, it doesn't allow for major stock corrections because, you're getting about a 15-20% correction on a stock that you're already holding. Funds are coming in and buying. Demat accounts are continuing to do well. Look at the way Angel One's doing as a stock. SIPs are continuing to do $1.5 billion plus. So all things considered, you may get a bit of a pause, I think, at some stage. But, the way I look at it is if this government was to get re-elected, I think the main focus now, because most of their agenda on regulation, on foreign policy, even things that have been bordering on the line of religion have all pretty much been taken care of. So I think if this government was to be re-elected again, it will be squarely focused on the economy. And I wouldn't be surprised if the index compounds at about 15-16% over the next 5 years, which basically talks about a doubling of the Nifty over the next 5 years. That's not to say that you won't have a down year. But I think all things point to the fact that
it's possible.
It is extremely doable. And also, Prashant, I think the other asset classes are not giving you much returns. I know gold is at a new high today, but I think after the finance minister tweaked the norms for debt last budget, and I think that's played a very important role. I think people don't understand how important a role that changing of taxation of debt has had to play in equities, because now post-tax on fixed deposits as well, your returns are 4.5-5%. So today, if I invest in a US Treasury, I'm getting 5.25%, risk-free, and in GSEC in India about 7%. So I think there's no reason to be circumspect. We've survived 2 wars, we've survived crude, rupee is stable, your CAD is stable, the external sector is all right. Let's be bullish as we enter the new financial year and hope that by 2029, if we're all still here and sitting and healthy, we're probably looking at an index that's double of where it is today.
Of course, we'll be still here. I mean, 2029 is not too far away. It's not too far away, right? I mean, 5 years from now. But a great start to the financial year, by the way. The sensex is now up over 500 points. The Nifty is up almost 180 points this morning. And the Bank Nifty is up 1%. And it's not just equities. Gold is also doing very well, as Rahul was pointing out. And one space that's looking very good this morning is the entire travel and tourism space. So stocks like Indian Hotels have hit fresh highs this morning. Indian Hotels is now at 600 rupees, which is a gain of almost 37% this year. And then you have Interglobe Aviation, which is also at a fresh high this morning. So
EIH is up 7%.
EIH is up 7% after the long weekend, right? I mean, all sitting there and raking in those earnings. But Rahul, good morning once again. So, what are the pockets where you see value now? Because anything and everything has been running up. But we had this patch, this volatile phase where a lot of stocks corrected as well. Where do you see the opportunities in the market?
So I think let's go contra, right? I think, defense had a good run. It had a bit of a correction, but I think there could be some value emerging in defense stocks like Mazgaon, for example. I think that looks interesting. I think chemicals as a space, it had a dramatic start to the lockdown, if you remember. These stocks went up multiple times, not in percentages, but then you've had a 3-year price and time correction. And I think from our brokerage perspective, I think we do see value emerging in names like Galaxy Surfactants and Fine Organics and Rosari Biotech, I think from the smaller ones. So I think chemicals is an interesting one to potentially play. I know even though the finance minister has scaled back on her own investments in terms of capital expenditure going into next year, and road construction hasn't been as much as we would have expected from the NHAI, I think a lot of this may correct itself post the budget. Whenever they present the next budget in July or August. Cement could potentially, I think, because it's been a little out of flavor with these entire talk of price corrections and all of that sequentially, I think that could also be an interesting sector. So I think there are definitely pockets of the market, when you look at, say, some defense stocks, chemicals, and cement were not entirely in favor completely, but not a bad time to start going contrarian in some of these names.
Interesting, Rahul. You know, the sector that was actually a big underperformer in the past fiscal was the banking names. And the Nifty banks returns, was much lower than either you look at the frontline Nifty or you look even at the broader markets. Do you think FY25 will be the year for the banks to come back? Point number one. And also we have a BofA Securities note earlier today that says that they still believe that PSU banks can surprise. Last year, the PSU banks did much better than the private sector names. How are you all placed out there?
So, Nigel, I think the valuations are not demanding. I think if you look at the top private sector banks in the country, whether you look at HDFC, ICICI, Axis, IndusInd, Kotak, they'll all be coming to you between 1.5 to 2.2 times FY26 price to book. And all of these guys will probably give you about a 15 to 20% kind of growth. The ROAs would be in the range of between, say, 1.5 to 2.5%. On that, if you looked at the credit growth numbers that came out last week, ex-HDFC as well, the credit growth was about 16.5%, which was remarkable.
Yes.
You had agri, you had retail, all growing at about 18-20%, services growing at about 20%. So I think credit growth's all right. I think for most of the banking names that I spoke about, and even some of the mid-cap names, I think there is a case for the cost-to-income ratio on a lot of these banks, including mid-caps, to come down by about 200-300 basis points, which would actually aid 18-20% kind of profitable growth on the bottom line. I don't think asset quality is a major concern right now. People spoke about retail asset quality emerging, but going back to the point I was making to Prashant that, if the Nifty was to go back to, sort of where I think it can go to, it can't do it without the banks.
Yes.
It's just not possible. And let's not forget, in the middle of this year, you have a very big inflow coming in from the JP Morgan bond index as well. So it's very possible that it finds its way into banks as well. So I think, like I was saying, in terms of chemicals or some of the other stocks that have corrected, I think Bank Nifty is a good place to come into. And you can extend that to NBFCs or gold finance. I mean, Muthoot is a name we've been pushing for a while now. I think, a 5% ROA business, 20% return on equity coming to you at what, 2.1, 2.2 times, not too demanding, I think. So there is value, definitely. Yeah. I think it's been a consolidating phase, but I'd definitely be overweight on the sector.
What about a comment on PSU banking names that did very well? You would rather prefer the private names, or do you believe that it has enough momentum?
Well, I remember when State Bank of India was about 450, 500 rupees. I think I was on your sister channel and I was making a point that it had no business being there. I mean, it was so depressed. And even today, I think if you look at the valuation differential between an SBI and the leading private sector banks, I think it must be about 40 to 45%. We're not sitting in an age where infra NPAs and, telecom NPAs are there, those corporate NPAs. That's the thing of the past. If I reverse the question and ask you, Nigel, can you give me one corporate that you think is going to go defunct today? You'll probably struggle to find it. So I don't understand why this discount needs to persist. I do understand that, these banks are perceived to not be run as well or more as efficiently as private sector banks. But I think Mr. Khara and his predecessors have done a remarkable job. I think that would hold out for a Bank of Baroda as well, barring that one glitch that they had on the digital side. Yeah. Now, will they outperform to that extent? I don't know. But would I still be a buyer in SBI today? Coincidentally, it's our, this morning after our morning meeting, we've just put it out as our idea of the day for our clients. So, I'd definitely be a buyer in SBI even at this price.
All right. Hindustan Copper, if you can have, I think we pointed that out at the right of the word go. It started at 280. 280 is the open on Hindustan Copper. Stock's almost at 300. So it's already it's been a few minutes since markets have been trading, but look at that. That's, by the way, also got humongous volumes, head and shoulders above the number 2 stock volume-wise, which is Adani Total. Volume-led gainers is what I'm talking about. The other one is MOIL. So these, the theme is PSUs, but the theme also is metals and mining, right? MOIL is the other one, which has got 5% on it now, 292 on manganese ore, and it's got decent-sized volumes for this point in the day. As well. Do you track any of them, Rahul?
Not actively, Prashant, but I think it's a proxy to China in many ways. And I think if that's the call that you're taking, the China's out of the woods and it's going to probably grow at about 6 to 7% for the next half a decade or so, then these become interesting bets. But no active coverage on these, so no specific.
I read something interesting with regards to so Hindustan Copper, of course, is the only pure play copper. The others are refiners, etc. The copper play is Hindustan Copper. And we've, of course, all discussed how this push to renewable will need so many transmission lines, and copper, of course, is going to be a big beneficiary of that. Apparently, with this AI boost, with these big supercomputers and big data centers, Guess which is the one commodity which benefits, which is it's once again copper. So Microsoft and OpenAI are building a $100 billion data center. So there was a piece which kind of talked about, I mean, how much copper you'd require for a project like that.
Incidentally, there is another stock, and I forget the name. I read about it on Bloomberg this morning, which has actually hit $100 billion of valuation in AI over the weekend. And that's probably, a lot of it is probably going to happen incrementally from here.
So you can buy AI stocks or you can buy copper.
Or that. But you know, the one thing that people don't realize is that despite these stocks hitting the kind of market caps that they're not out of whack in terms of valuations. I mean, I don't know how many of your viewers would know that for the market cap that Nvidia has captured on a 1 year forward, it's only trading at 27, 28 times. It is remarkable for a company. Just it's basically trailing earnings, right? The kind of earnings. So you think intuitively that, oh my God,
you're talking about billions and trillions.
I don't know if you remember when Dixon's never been more than a 45 PE stock. And it's remarkable because it keeps growing its EPS by 40-50% every year. So then you're okay giving those valuations for a 40-45% company, but few and far between, I'd say.
Actually, it's interesting. Amazon spent about $2.7 billion in the AI startup Anthropic, right? And together, Amazon has put almost $4 billion. So large tech companies in generative AI particularly. Now in India, there are a lot of companies that are doing work in generative AI, but in the companies that you track, anything specific that you like?
Ooh, I wouldn't be able to enough in that space. And I don't think even if they wanted to do it, they could do it organically. I think it'll have to be done inorganically. I think they'll have to buy that talent. They'll have to buy those assets. They have the money to do it, but I think in big area where growth comes from, because traditional IT services in India, I think it's at a 5% kind of growth at a pivot. In a good year, that probably goes to 7-8%. In a bad year, it comes down to 1-2%. But if you're able to buy growth, say something like what Accenture did, right? If you look at Accenture's numbers, the organic growth is actually -1%, but because he's included his acquisitions there, he's been able to give you a positive number. So I think this can be bought. It need not necessarily be homegrown, but I don't know of a major way to play this direct listed equities in India just yet.
What about names like, say, a Persistent Systems? Because, they did mention how they are looking to acquire companies in various spaces, generative AI, consumer tech, which is big now. So any of these names that you would like?
So Persistent has been a remarkable story. I think it went into the lockdown at a certain price and it came out of the lockdown some 6-7 times.
Yeah.
And obviously the entire operating metric for Persistent changed between FY 15 to 20 and what it has done post FY 20. I think in terms of earnings CAGR also, it's probably been one of the best in terms of the IT services sector. But I think, Sonia, it's a very interesting point you make. Because for a lot of these mid-cap or larger mid-cap companies that are knocking on the doors to become large-cap companies, this is their competitive advantage, right? So would I buy a Persistent today in the hope of the future? I'm not sure, because valuations are very expensive. I think it's almost 8 or 9 standard deviation over a 10-year mean. But that again takes into fact that there was a depressed phase of earnings. But I think overall on IT services, we are cautious right now. But if these guys were to be acquisitive in the right way, then, you never know.
All right, Rahul, always a pleasure talking to you. Thanks so much for stopping by and giving us your take on the markets and how you see things shaping up as well.
Thank you, and wish you guys all the very best for the new financial year to your entire team as well.
To you as well as your entire team. Thanks a lot, Rahul. Well.